Yes,
Yay.
it's Thursday.
Thursday.
Happy Thursday.
Thursday.
Friday Eve.
Thursday.
Yeah,
Friday Eve.
Friday Eve. How is everyone this week?
We're good. We are blessed. I hope everybody is safe in this weather.
Yes, we're praying
Yeah.
for all the people in Texas.
Mhm.
Yes.
Anybody else?
Texas, Oklahoma,
Yeah, all the other places.
all those places. Yeah.
Our prayers and thoughts are with them. But we are blessed that we are here again with our good girlfriends for another Thursday night. And we're excited tonight because we are going to be talking about how to get ready to prepare for our taxes. That's a big deal in these days. So hopefully we will have lots of great questions out there. Send your questions in. But before we get started, I want to say that if you've been to any of our good girlfriends or you want to know about us, please go to YouTube and check out our good girlfriends YouTube channel.
Hey.
Subscribe and send all your friends and family there. We have some great discussions, and we hope that they will bless you all. So please check those out when you get a chance. But we'll get started tonight. I am Cara Dunstan. I am always so excited to see my good girlfriends and to meet new ones. I'm meeting 2 new ones tonight, so I'm excited about that. So let's see, Marcy.
Hey, good evening. Marcia Penn here. My sentiments car as well. Always grateful to meet some new good girlfriends and always grateful to see some familiar smiling faces. Grateful to be here on this thankful Thursday.
Cece.
Hi, I'm Cecilia Horton Jones, and I always enjoy talking to my good girlfriends. It's a blessing to be here with you all tonight.
Yay. Is it my turn? Hi. Look, I guess it's really 2 days of look. We know you all were doing nothing all day. You were trying to take a snow day, but anyway, it's good girlfriends Thursday evening, and we are glad to be here. I'm glad to be here with familiar faces. Even our guests are familiar faces to me. Card laughs at me all the time, and she's like, Regina knows everybody, and I don't, but I do know some people, and I'm happy to meet. I always love to get connected to new people, so I'm glad to be here this evening.
So hi, I am Juanita Tubman, aka Q. I'm here tonight and very excited to introduce a friend, sister friend, who I met through somebody else. And then she had all kinds of hustles going on, including mentoring her daughter with a shirt company that we did.
Oh, cute.
But her many streams of income, one of which is she is a tax professional here in Maryland. And so on this Friday Eve, meet my good girlfriend, sister friend, Stacy Johnson.
Yay.
Hi, everyone. I'm Jeanette, and I'm very happy to be back for another Thursday with my good girlfriends. To those of you that are new, welcome to our virtual living room. And to those that follow us every week, welcome back. We're glad to have you on the couch with us. It is my pleasure to introduce tonight my bonus niece, Miss G. She is an accountant, a young accountant. She has her own practice. She's going to share with us her knowledge of tax law for New York State. And we are very pleased to have her with us. So I always say that we are not experts, but tonight we brought in 2 powerful sisters to be experts to guide us as we prepare for this tax season. And I'm very excited to have both of you here. So welcome.
Hello.
Well, ladies, jump right in with questions, or else Stacy or Ms. G, if you have information you just want to share with us. I have a couple questions, but if you all want to start off, that's fine. Whatever works for you works for us. What should we know? What do we need to know?
Be prepared.
Okay, I love it, Stacy. Just get right to the point.
Just be prepared. It's not a form of being scared or the IRS or the state is coming to get you. It's just being prepared.
And that's what we're here to help you with, is so they won't come knocking at your door. And if they are coming knocking at your door, you have someone to back you up.
Yes. So I guess that's the first point you may be making, is that it's probably, unless it's a very simple case, it might be best to have a tax preparer. Is that what you're saying? You're an advocate of a tax preparer, or do you think that people can do it on their own?
I think that this is a hard year. Oh, I'm sorry.
Go ahead. No, go ahead, Miss J. Go ahead.
I think that personally, I think that this is a hard year for people to do their taxes themselves, just because so many people have expenses and like income that they don't typically have, like unemployment, people that have side businesses. Some people got PPP loans, or EIDL loans with the SBA. Some people didn't get their stimulus money, and so they're wondering where that is. Some people had kids in 2020 and they want the stimulus money for that kid that technically qualified. So I think, I haven't used the tax software, and Stacey, I'm not sure if you have, like the free tax software to know how in depth they cover like the new, like what the changes are. But to me, like even a simple return is just someone who normally has like just W-2 income, they have unemployment, which may push them into owing, or like I've had clients who have taken money out of like their 401ks or retirement accounts because they didn't have, income coming in, or they were furloughed, and then they have special tax rules now. Like typically that money is taxed immediately, but under the CARES Act, you now have 3 years to pay the tax penalty on like your early withdrawal money. So I think I'm an advocate this year, like unless nothing changed, I do think that you should, even if you just pay, if tax preparers have a service where they can look over your return to just make sure that you've kind of accounted for everything that you need to this year. Like, I do think that you should speak to someone.
Absolutely.
So Stacey, let me ask, when you say be prepared, give us an overall idea for, because I like what Ms. G is saying about a lot of changes have happened to folks during COVID. So give us an example of when you say someone who was just like really prepared, and then maybe a worst case scenario of you're like, what the heck did you do, or what have you been doing? I think that's helpful for,
right.
Because listen, I have a dad he has a little trash basket, and I'm like, you didn't empty the trash. He said, oh no, that's all my stuff for my taxes. And I'm like, oh, so his file system's a little different than mine.
Right. So all in all, I think everyone should be filing a tax return. Even if you did not file a tax return, you should be filing a tax return, because I'm gonna use the example of my mother. My mother's 84 years old. She gets Social Security. She doesn't have any other income, but she did not get her money from the stimulus. So the only way that she's going to get that money is if she filed her tax return. So, and a lot of elderly people might not know that, or if you did not receive your stimulus money, that you need to actually file. So to get that for the 2 payments, if you didn't receive those 2 payments, then you need to file a tax return. And so that means everybody that didn't get the stimulus need to file the tax return. And then you don't know what's going to come down the pike for the next stimulus, if there's a next stimulus, and they're basing it on if you have any kind of income or if you file a tax return. So everyone should be filing a tax return. So, and then the other thing of what I'm saying is being prepared is all documents, you should have received all of your documents already, or some of them might still be coming in, because yesterday I just received an email and said, hey, your 1099 is available for your taxes. So you should be just, have a pile, have all your tax documents together. And maybe you should get a checklist, because, if you have a tax preparer, they should be giving you some type of checklist so that you'll know if you're missing something. Just something as simple as that, a checklist, making sure you checking off saying, yes, did I get all my W-2s? A lot of people don't know what to do with unemployment. They don't realize that they have to file their unemployment and that it is taxable. They thought, everybody thought it was free money. It's not free money, it's taxed. So yes, you have to file it in this year. Just being prepared with all documents. And then, like I said, if you have someone to help you, if you have a tax preparer, or anyone that's helping you doing your taxes, at least knowing exactly all the documents that you need so that you you have everything, and that you do not get any type of letters or pushback from the IRS or the state.
I have a question about, are there any new tax laws or tax breaks I'm looking for, as far as if you work for a company, so it's not your own business, but you're working from home and you're using up your own electricity and your own.
No, and they specified that because they figured all the moms would be teachers this year and try to deduct. So they did, in the CARES Act, they specify that you can't claim, for home office expense. Because the first thing I said was, oh, I'm claiming my Wi-Fi, I'm claiming this because my office is at home now. But if you're working for an employer, you get paid, then no. If you're self-employed, if it's a business, yes,
Right.
but from an employer, no.
Okay, I'm gonna go one step further. What if it's a combination? It's a combination. I'm self-employed. I mean, well, I actually have, I have 3 jobs, Stacy, or 5, like you. Look, because Stacy and I were in one of those businesses together. But I have a business. I'm a pastor in ministry, so we couldn't be in our churches. And then I was employed for part of the 2020, what are we in, 2021, 2020. So could I claim part of my house?
Yes, the whatever portion of your home office space that you use, you can claim that. It's a formula, but you can claim that portion of it for your taxes under your business.
Okay.
Yep. So
are there other are there any like write-offs that we can take as a result of COVID that folks don't know about? I mean, I've been hearing all about on the news, and now, listening to the both of you about things that, no, you can't claim this, but what can we claim that we may not know that we can claim?
So blanket statement. So taxes are so like individualized. I just want to be clear. I'm giving examples and not advice. I don't want anybody to write you and say, those women that you had on there said we could do this, and I tried to do that. That didn't work.
Right. We're just sharing information, guys.
Situational.
We'll go see your accountant. Go ahead, G.
I don't know about write-offs. The CARES Act, which was what your last president took forever to pass at the 100th hour that night. It gave a bunch of kind of like credits and things like that, things that were like situations. I don't know about like write-offs where it was a direct kind of like, you can take this. It made a lot of things almost a possibility. So for individuals, like they talk about, with the retirement fund, that was a big one for people who liquidated their money, unemployment, things like that. If you had babies, what would you do with the stimulus money, as Stacy mentioned? Like if you didn't get your stimulus money, that's on there. A lot of the rest of it is geared towards people who got like small businesses, LLC. So people who had to categorize the loan money. So they went back and forth on PPP a bit. First, they said if you paid the expenses with your PPP money, you couldn't deduct them. And then they came back and said, oh, okay, well, now you can deduct it, like in this next round of rules that they passed. So they did a lot of clarifying, a lot of what people could do with the loan proceeds that they got, like what was eligible and what was not. So it wasn't a lot of write-offs per se, or something that you're going to get a direct credit for. I think the only credit is the stimulus, which is an advance on the credit. So anybody who didn't get their stimulus, they'll get that. That's a refundable credit, dollar for dollar. Other than that, it's not really specific on anything that you can just kind of like, oh, here's some money for you. The one thing I will say, if you have kids, for the earned income tax credit, because Stacey touched on unemployment. Unemployment is taxable, but it's not earned income. And so people with kids who get the earned income tax credit, if your 2019 income will get you a higher credit, they're allowing you to use your 2019 income. So for people with children who maybe only worked part of the year and you can't use unemployment for that number, they may want to use their 2019 number. And you can, it's simple as just having your 2019 taxes and on that line for earned income, see which one you get the higher credit for. So that was a big one, because a lot of people were worried that because they had unemployment, a lot of people from March to December, they wouldn't get any money back that they usually get for their children. So they're allowing you to use your 2019 look back number. So that was a big one for individuals, people with kids. And earned income you can also get without kids up to a certain income limit.
And then I also want to piggyback because Stacy and Maryland, like the governor just did this whole relief package, which does have some tax benefits for small or tax, I don't know what it is, but small businesses. There's some, I just read something today about the small, like he's gonna give a relief to people with a certain amount of, and I don't know the details because I didn't.
It's income based.
Yeah,
as
it's
well.
income based, right? But then there's some tax relief to small businesses, I think, that I read too. So I think you have to look at your state too. If your state did something as well, that's why I think it's important to get a tax preparer, because there's all kinds of things that you may not know about, right?
Yeah. Okay, so
Yes.
that was a good question from Jeanette about what have they added, what have they taken away from us this year that we might have had credit for last year? Anything major?
The only thing that not major, they did do a reduction on the charitable deductions.
Alright.
If you give money, yep. So they give up to a $350 above the line credit for that. But we haven't really had, so I think the big thing was the CARES Act that they implemented with this new kind of COVID thing. They haven't taken away, I don't think we've had like a large tax overhaul since 2017, where it was just kind of like bunches of new things were coming in the works. So I think it's pretty normal. Like everything else is kind of like lay of the land. And the CARES Act, like I said, was just a lot of clarifying with this new kind of like, because so many people were out of work and on government assistance and took money, kind of how you handle that tax situation.
So basically, it's the same right now as how when Trump changed it, he's gone, and it's still the same until Biden has a chance to put his hand in it and fix
Right.
the tax.
Right. So maybe
So middle
next
class
year.
people are still getting the shaft.
Yes, you are.
Now, they did change a little bit about the charitable contributions, is that they're allowing you, if you weren't able to itemize, that they added it as a deduction on the front of the 1040. So some people who couldn't actually itemize, or because of the Trump changes and things like that in the tax laws, that, you had a house, everybody said, I have a house, I have mortgage interest, I have real estate taxes, I have all of that. And also I'm a big giver, but I didn't give enough to get to that, give above the standard deduction. They added that to the front of the 1040.
Okay, cool.
So some people, not to say everybody, but there's some people that might be able to take charitable contributions this year.
I kind of wanted to go back to what Marcy was talking about with her dad, because I used to be, as a matter of fact, I have this folder that's right over here on my desk that has, receipts, and all my W-2s are in there, my taxes from 2019. Like I have this whole folder with some of my things in it. But I have found that there are some apps that you can use to track mileage and to track other things that will make it easier for you. So you want to keep as much paper, for those of us that can use, are there any suggestions? And not to say that you are guaranteeing any of these things, but are there any I know I use QuickBooks for my business, so that has been able to help my accountant a lot with tracking some of my business expenses. So I don't know if you all wanted to speak about
And
it.
actually, I have a client that has QuickBooks, but they just use the self-employed, and that also does a tracking of mileage.
QuickBooks also has the feature where you can take a picture of the receipts and upload it directly into the software. Because with my client, I don't have many, and I'm not taking a jab, Miss Regina, but I don't have many clients that are still paper based, because they come to you with the folder and you ask them, well, what was it for? And they have no idea, but they're so proud that they kept the receipt for 12 months. And I'm like, well, we can't do anything with that. So, I like the upload feature because you can put a quick little description. You say, for car, meals, something like that. So at least where, what we're going with, because an expense with the receipt with no description is really useless.
See, my accountant laughs at me every time. He's like, Regina, come on now, girl.
I will turn somebody away, especially if you don't know them. You're just like, so what do I mean, and they bring it and they open it up on the desk and they're like, I have all these receipts, and you're like, and what should I do with that? Exactly. I'm not, but yes, I'm a fan of QuickBooks as well. And then you can import it usually like directly into a tax return if you use the software that it's compatible with. So that's pretty much my go-to, but there's a bunch out there. I mean, Stacey, I know they have Wave, which is supposed to be like a QuickBooks, a small QuickBooks. They have FreshBooks. So they have a bunch of like apps out there that you can get. But to me, QuickBooks is tried and tested and true, and they integrate with a bunch of things. So I usually go with them for a recommendation.
Exactly. And think about it is too, you have to know what you're using, because junk in is junk out. So you can put because the one thing I saw was it'll say, just because I went up to the street to the grocery store, is that a business expense? It is not. It is not, because I went to the grocery store. So no, we cannot write off that because we went to the grocery store. So, and then, I mean, we sometimes tend to listen to other people. And I'm like we talked about earlier, your situation and my situation are two different situations. So that's one of the reasons why it's best to, just follow the ruling. If you're gonna, write it down, some people like to write it down, because some people are still, they're not in the, in the savvy world of the computer. But keeping your receipts, if you're going to keep the receipt, please write on the receipt and say what it's actually for, so that we can decipher if that really is a business expense. Because everybody thinks everything that should be written off. Everything cannot be written off for your business, and it has to make sense. So at the end of the day, if you made $10,000 and you spent $20,000, that doesn't make sense. So you can't write off everything.
Oh, that's a good one.
You cannot. IRS is going to say, how did you pay your bills? If you only made $10,000, you spent $20,000, how did you pay the mortgage? How did you pay your gas and electric? How did you make those charitable contributions? So it has to make sense.
I want to go deep on a question. And I'm going to ask you, because there may be some people out there, right? They didn't pay 2019 taxes. They didn't do their 2019 taxes. They may not have done 2018 or 2019. They may have done them by now because they realized they weren't getting any stimulus money till they did it. But
that was the mad rush.
You all probably were busy all year long. All year long, y'all were like,
this was a good year to have, because literally people are like, I didn't file since 2017. You think I could get a business loan? And I was like, no, I don't think that's possible.
Well, that's good. So yeah, so just talk about that, because I think, because sometimes people, especially sometimes in our community, they're afraid to go. They are sometimes afraid to do that. Like they're like, oh, they're going to catch me. If I file late, they're going to catch me. And, and like you said, Stacey, I think when you started, don't be afraid of the IRS. Like, it's nothing to be afraid of. Right. But it's
they will catch you.
They will catch you. But I think as long as you don't owe, you should, of course, file your taxes every year. But if you don't owe anything, I think when you do, now I'm not a professional, that's why we have these two beautiful
women. You're right on. That is the key.
So if you don't owe anything, you're good. But if you owe, it's a problem. If you owe 17, 18, 19, then that's when it becomes a little scary.
Right. And then they add penalties and interest and fees.
Daily.
The IRS is the worst people to owe in the
world.
They are, and they will take their money. They will ask you once or twice, but they're gonna take it. And they charge it's every day. Until you pay it, and you can put it on a payment plan and say, it's 10,000 today. I'm gonna pay 500 a month, and they'll say, okay, and we'll stop charging you. So it might have been 10,000 when you started. It might be 22,000 by the time you're done, and they don't care that you're paying it monthly, they still add on, you know, penalties and fees. So I'm always a fan of, even if you don't do it, because what people's circumstances, even if you don't file, I do think people should just look and see, you know, if you owe or not. And, you know, if you don't owe, then okay. And it's not okay, but it's no harm, let's say. You're not charging yourself extra money. But if you get a refund, I don't know why you would let the IRS hold your money either for 3 or 4 years. So,
Right.
Let me
to
ask
me,
you, is there ever a time when you can negotiate if you owe money? Are there circumstances, even extenuating circumstances, that that the gangsters might be willing to ease up a little?
people have
Maybe
tax
willing to ease
settlements.
up a little. Have you had those circumstances?
Yep, they have tax settlements. And they also, I mean, if you go to, you can put it on a payment plan. So they have that option. They give you up to 6 years. There are people who can settle their debt with the IRS. And it's situational. You know, some people have extreme hardship where they can prove that they can never pay the debt, but they don't give you much guidance on how to do it. So they let you know that it's an option. You can write them on their website. You know, they have a step-by-step process. I've never seen it happen, but apparently it does. So
while I'm working, I have the radio on, and all day I hear commercials on that tax.
I know.
Like if you have tax problem or you so much in
Debt
tax
relief.
debt, right?
Debt
So
relief.
are those companies reparable? Like, do they really get people out of tax problems?
Okay, so this is my take on this. Okay, and Ms. G, you tell me how you feel. But
probably the same way you do.
the time that you took to deal with those debt relief companies, you should have paid your debt. Because they're charging you a fee to get you out of something that they can't. I mean, you have to have extreme circumstance, right? The IRS will work with you, yes, but they want their money, right? And the thing about it is, if I'm 30 years old and I owe $100,000 in taxes, you still have life, right? So they know that they're going to get their money somehow, some way, right? Now, if you're 60, 70, 80 years old and you're in debt or you are in real hardship, then they may say, okay, let's work on something. But an offering, which we call it an offering compromise, it takes a lot of work. It takes a whole lot of work. It's not something that is going to be like, hey, I'm gonna fill this paperwork out and they're going to give me a reprieve. They go deep. They ask a lot of questions. They want to know what your assets are. They're going to pull. If they know you have a house, they're going to put a lien on your house. I mean, so my thing is, these debt relief companies, they make you feel like that they can get you out of debt instantly, and that's not true. And I think basically the time that you took to deal with them, you should have took the time out to work with the IRS to get your debt, to cut down that debt and figure out how you can cut down that debt, because they're not doing anything that you can't do. That's what I want to say. Okay. Same thing is like when you're cleaning up your credit and all of that, same thing.
Right. So I have another question. So I know she kind of asked this for like 3 years, but so somebody have almost never filed taxes, maybe 10 years, more than 3 years, like 10 or 15 years, then what should they do, or where should they start?
At the last year that they filed taxes. So I mean, because you can't, unless it was a year where they didn't have to file. And sometimes, it's income limits where someone doesn't have to file a tax return. So unless they're like in one of those where, they didn't make over the amount that they need to file a tax return, or they didn't have earned income, something like that, you have to file. But like I said, if you don't owe, they may not come looking for you. The issue with the IRS is they're attached to so many things that you really don't realize that you need it until you're trying to do something. So you go to do something and then it comes up and it's like, oh, you haven't filed your taxes. Or like this time it was the COVID relief money. Sometimes it's somebody trying to buy a house, or you're trying to buy a business, you're trying to do something that goes through the IRS, and then it's like, well, you're not up to date with your tax liabilities, or you may be trying to get a loan. You don't know what it may be when it flags and says you haven't done it, but then once it flags it, you have to do it, and now it's a hassle. So you can also create an account on the IRS website where they have your transcripts of and I'm not 100% sure how many years it goes back. It may be lifetime, not sure, but it'll show you if someone, let's say you work for a company and they filed a W-2 or 1099 on your Social Security, that'll be there. So a lot of people say, oh, I didn't file taxes because I don't know what my paperwork is from 2017. You can log on to the website on IRS, create an account. They'll have transcripts of whatever was submitted to them for you in that year. And then that's usually, if you don't remember what job you had, that's a good place to start. So they should have at minimum your W-2. And again, they're not responsible. So you can't say to them, well, I couldn't find the paper and you didn't have it on the website, so I didn't file my taxes, because they're going to tell you that is not, they're there to,
Not a
to
good
kind
excuse.
of help. No, they don't take excuses at all. They don't care about good excuses, bad excuses. But that is there as a tool to if you have to start someplace. If someone was saying, like, I don't know what to do, it'll show you the last year that they have on file for you, plus whatever income that has been reported under your name, under your social. And then you can pull the info from there and put that into your tax return.
Okay.
I have a real quick basic question. So I know last year they extended the deadline of when you could file your taxes. What's the date this year? Are we still in April, or did they extend it again to, I think last year was July or something?
I doubt it.
No, it's April the 15th.
Okay.
You don't think it's going to be
Though,
extended
because-
since they wasn't even taking returns until like late February, and some people didn't even get W-2s until late. So do you think they will extend it again this year then?
Biden is trying to be the best president ever, so he may, but I don't know. My opinion is they may, but I'm thinking that they lent out so much of this money. There's so much of this. I think the stimulus is going to drive that people are not going to need an extension, because so many people are either that, especially people waiting for their refund. Like, I don't know, but my opinion is that they're not going to extend it by far, because they need to account for all of this money that they've lent out. And one of the best ways that they do that is with the tax return. So, I mean, you can file, but you can always file for an extension. The option is open. You can file the paper to get an extension. And all that really is telling the IRS that, hey, I know it's due, but I need a little bit more time. But if you owe, it doesn't give you an extension. It's really an extension on paper, because if you owe, it doesn't stop the penalty. Your penalty starts accruing April 16th, unless they move the date. So.
Gotcha.
Oh, that was good.
I'm one of those bad people. Stacy, no. So what kind of extra penalties do I have since I did not file my 2019 yet? Is it just financial?
Penalties, your penalties and your interest is accruing daily.
So it's a financial penalty, like they're not gonna, like.
Right, if you owe, if you
owe.
refund in 2019,
If you don't owe,
there's no
If you don't owe, then
penalty.
no. If you don't owe, then you will be fine. It's
Right.
just that why you think about it is, and that's why I said don't be afraid of the IRS, is because of the fact that when you do that, they're holding your money
for free, no interest,
for free.
nothing, just free.
Yeah, for free. And then there's a statute of limitation. So if you keep holding on, it's 3 years for the federal and 2 years for Maryland state. So if they owe you a refund, then they don't have to give it to you if you're past the statute of limitation. So you don't want that. So go get your money.
Well, coming from a person that has been audited in recent years, I think my biggest hesitation and my fear is not having enough documentation. I've had to move. I've lost some things. Like, what do people do when they don't have the proper documentation on deductions or expenses or something like that?
The tax law would say don't claim it. That's what their almost official answer is, if you can't justify it, to not claim it. But we all know, you spent your money on it. I've been audited myself before too, and it was a arduous process. And so to me, I keep, and like I said, and because as you know, with each audit, it's a gray. They're very gray. It's not black and white. So it's not it has to be this and can't be that. Some people keep records where they keep a logbook and they write down, everything they do, and then they submit that, and that could work. Some people have an Excel sheet. I take my business bank account at the end of every month and I run the Excel and I just put business descriptions next to it and I save it down. And it at least has a timestamp date that I did it, not when I got audited. I did it, you know, whatever that month was. And so sometimes I don't have the receipt, but I have proof of the purchase or proof that I did pay that out. So, and Stacy, please add on, like, so to me, the IRS they have rules, but it's also sometimes open for interpretation with some things. And so like a paper receipt could work, an Excel could work, you know, different things can work, but it might have worked for you and I might have tried it in my audit and they said, well, that's not acceptable for this.
Right.
And so
Mm-hmm.
that's you know, and that's why sometimes I'm like, it's good to work with a professional because sometimes they just have a bit more insight, because you might think, well, this is perfectly fine, and something will happen and you're like, oh, well, that didn't really work. And it's really an interpretation with them. So I've always tell my clients, keep records, even if, you know, it's not the physical receipt. If you can prove that you're running a legit business, like, you know, you are buying things, you have receipts for 90% of what you do and you keep records, then it to them is like, okay, this is a kind of, you know, it looks very legit. If you're somebody where you claim $10,000 worth and you have $1,000 worth of proof, and then it's like, well, now this 9,000 seems very made up because you can't bridge the gap. So to me, I'm always like, as close to what you're claiming on your return, if you can have the backup support and save it someplace, you know, like Stacy said, there is a statute of limitations that they can come back, and it's different from if they suspect fraud or if it's just a regular statute of limitations. But I would say every year when you do your taxes, put your documentation, your taxes, and your backup all in one place. So if they ever come back and ask, you have it all together, because I promise you 2 years from now, if they ask you what you claimed or what you were claiming for like a supplies line, you're going to be like, I have no clue what we lumped into that number. And the IRS, you know, they're picky. It can be $200 and they want to know exactly what got you to that $200. And so, you know, you have to, I agree with Stacy, like with being prepared, it's being detailed. You know, it doesn't have to be a bag full of receipts, but at least something that you're saying, like, this is everything I claimed in this category. This is everything I claimed in this category, so that, you know, that you have it.
And to add on to that, I was going to say is not to commingle your funds, so that if you have a bank account, so for a business, you should have a business account. And so everything should be running through that, not your personal business or anything like that. So in the case of getting audited, you have a trail of that's a document, right? But if they see that you went to the hair store, you went out to eat 20 million times, and you didn't, it has nothing to do with your business, I mean, things of that nature, then that for them, that's going to be a problem. So if you're running a legitimate business, you should be running all your expenses through one account, and they should be legitimate expenses, so that even when you're preparing your tax return, you can go back and say, hey, these are the expenses that I incurred in this particular year, this particular month, this particular time, and I can take this on my tax return.
Oh, I have a question. How far back can they come and audit you? Like, in other words, so can they come back and from 2015 and say, we're going to audit you from 2015?
If they think it's fraud, yes.
I think it's 7 years if they think it's fraud that they have. 7 or 10. But they
can go back. They can go far back. If you've gotten audited and they figured that it's fraud, they can continuously go back. Now, that's why you want to keep everything legitimate. And, you know, so many people say, I take this, I take that, I take this. I don't know why you don't take this. I went on a trip and I wrote off on my entire trip. Was it business or was it personal? I mean, those type of things. When people say that they can write it off, people get a business and say they can write it all off, you know, and then it comes down to, hey, the audit, the buying of the house, the buying of the car, the buying of anything major, and they want to see your financials, and your financials are really jacked because it doesn't make sense. So it has, like I said, that's why I said it has to make sense, and just be prepared, making sure and actually talking to somebody either monthly, quarterly, so that you know, they can tell you, hey, let's talk about what's going on with these numbers. What are these items that you're taking, or what you say are business expenses? Are they truly business expenses? Or are they personal? You know, and you know, we get caught up in that. You know, we don't want to pay taxes. No one wants to pay taxes. And the bottom line is no one wants to pay taxes, right? But that's not
Realistic.
that's not realistic, right? We have to pay taxes, but our job is for you to pay the least amount of taxes in the right way, right?
So I have a question. So a lot of what you guys have talked about tonight involves a lot of it has to do with if you have a business, right? Because people try to write things off based on their business. But what if you don't have a business and you just, want to, like this year, last year, I'm saying this year, I ended up owing a little bit of money, but I didn't want to owe a thing. And I told my accountant that fix it so I don't have to owe anything. I don't care what you have to do, but I don't want to. Anyway, I ended up owing a little something. So what is it? What advice can you give to folks that just, regular folks, you go to work, you file your taxes so that you don't end up owing anything? How, is it something that I need to adjust on my, deduction? What is it that I need to do?
I mean, usually as people are not withholding enough taxes from their income. I mean, if that's all you have, that's typically it. And to be honest, America is such like a business country that most of the tax breaks and things go to people with business. And that's why so many people have businesses. And like Stacy said, people have businesses sometimes just to flow their expenses through a business because they have this income and they can't figure out what to do with it. The only other thing to me, when you have just W-2, is that you put your money into tax vehicles. So people may put it in a deferred comp, they put more in their 401k, into a Roth IRA, something like that. But a lot of people don't want to. The issue is people don't want to pay taxes and they don't want to part with the money. So they want to figure out how to keep the money and not pay taxes. And the IRS is not designed for that. It's designed that either you're going to put it into something that with you can grow money that you can't have, or you're going to take the money home and they'll get the money. But it's not designed for you to keep the money, which is why so many people get businesses, because their idea is, okay, well, I'm going to flow as many expenses as I can through this business to get, even if I got a loss on my business and I owe and hope that it nets out someplace. And I think with COVID, the one thing I will say with the money is this is the first year that I have clients saying they don't want to write off all the expenses because with COVID, they gave you the money based off of the net income. So not your profit. It was after all. So last year, if you made 60,000 and you wrote off 50, and you said you only made 10, and then when you applied for your loan, and they said, well, we're only going to give you 3,000 because you didn't lose this much income.
Yeah.
Now everybody is upset, but because you want to say that you had all these expenses, and so now I think people are seeing the importance of having your business have a higher bottom line and not top line, because they don't care what you made. It's like, how much did you keep? That's right. Really what you lost. Like if you only made 10,000 last year, why would I give you $100,000 loan this year? You didn't make that kind of money. Right. So I think this will probably be the first year that people won't come in saying, what can I write off, or what can I put on my taxes to make me owe less? Because now they see the funding's available and they want the number to say something big so that they can use that number on their loan. So I mean, from an individual, I really think your options are to withhold more taxes so that at the end of the year, you're netting as close to zero, or you don't bring so much money home. And, people can put it into, like your retirement plan. You can put it into any, like a tax savings, a tax vehicle where you're not getting the money directly to you. So you don't claim that money and goes in pre-tax. But no, you're right. With middle class, there's not much relief for the regular, average, working. You don't own anything extra other than like a house. You don't have rental properties, but it's very bleak. And Stacey, if I missed, but to me, I never have advice for those people. They either owe or they don't, but it's not much.
Straightforward. You have to have your withholdings taken out correctly. You can't be claiming 9 and then switch it in the middle of the month.
Stacey, go ahead and talk about it.
No, this is what people do. It's what they do because they want the money, and I get it. I understand. And you want the money, but you're going to pay taxes on the end. So you should be, if you're single, 0. For my clients, especially as they start off young, I always tell them do single and zero. They're going to end up, because everybody wants, it's easy to, people say they want their money, but at the end of the year, then they ask them, why don't they get a refund? Because you didn't take out the taxes. Is it right to do single and zero? It may not be right for single and zero, but that's the highest tax bracket, and they're going to take the most taxes out when you say single and zero. So if you want money at the end of the year, then you change your exemptions. And now it's changed a little bit. It's how it goes, is it single?
Yeah, they changed the W-4 altogether
They
now.
changed the W-4, so it's not like you can say single and zero or something like that, but they give you're either single, married, or
Head of household.
head of household, yes. And so I just try to stay away from the head of household, because you don't know what some things that may change in your house. So if you're looking for a refund, my thing is, especially for high income or even high mid income households, I say, single and zero or married. It used to be what used to say married at a higher rate or the single rate or something like that, so that you can get, because especially if you're married, that's the other thing too. When you're married, you don't know what your spouse is claiming. So if your spouse if it's two people in a house and your spouse is claiming 2 and you're claiming 2, that means y'all claiming 4 at the end of the year.
Wow.
You know what I'm saying?
That's good,
So
Stacey.
that means that y'all take is more taxes, and then their job is don't know what the other job is taking out. So when you put those 2 incomes together, you don't know what tax bracket you're going to be in. So those things you have to take in consideration when you're doing tax planning and things of that nature, because people don't think about that until you get to the table and you're saying, well, why do I owe? And your husband said, oh, well, I had 9, and oh, wait a minute, no, I had 4, or I was claiming head of household and I was claiming head of household, and you don't have any other expenses to write off to take up that tax liability. So you have to be real careful with that. So
my question is, if you're married, do you have to file with your husband?
No.
You can file married filing separately, but you have to file married.
And that's the worst way to file.
Married filing separate is horrible.
It's the worst way to file. Married filing separate. So
I only advise that to my clients if someone owes, if your spouse or someone owes, if you have like child support, something where they may take the return, and then I understand from a financial, because they don't, sometimes the other spouse is like, well, I want my refund. I mean, but other than that, if you're married, you get more of the money if you're married filing jointly.
And even in those situations, I do an injured spouse form also, so that they still, so they don't have to do that.
So injured spouse form is for when the one of the married couples owe
it's
something
supposed to it helps the injured spouse, which is the person who does not owe. So that the IRS you can file your tax return as a joint tax return, but the IRS will calculate it based on what the injured spouse doesn't owe, and give that portion to them, and take the other portion, what is owed by the spouse that owes.
Right, the spouse that's innocent. It's like an innocent spouse.
Yeah,
correct.
Filing.
So what about if one of the spouses has businesses or whatever, and the other spouse doesn't? Do you still advise them to file it together?
It all flows through, especially because if it's an LLC, so it's still reported on your regular return. So it will just flow through to the income for that spouse, who owns the business.
So when you file married filing separate, there are things that the IRS will not allow you to take, because at the end of the day, they say that you are one. So you also should be filing together. So if you're filing separate, now we're going to penalize y'all for separating yourselves. So there's certain deductions that you won't be able to take. There, it's a whole lot of different. It's a whole list of things that you thinking, oh, I'm gonna write this off, I'm gonna write that off, and then when you file married filing separate, it's not allowed.
Wow.
So for a middle class person,
Jeanette,
It's worth it, man.
coming back. Okay,
Like,
Jeanette's like, well, I'm coming back. I'm coming back to it again. Come on, Jeanette.
We need to help you, boo.
She's like, I'm coming back to it one more time, one more again.
What about the middle class?
Right, I'm gonna bring it back to us because I'm believing in Biden for a blessing. I'm gonna just say that. I'm gonna put that out there in the app.
Yes.
Amen.
But I think that it's almost beneficial. That's why so many people start businesses. I mean, and I'm not talking about a fake bit. We all are very creative people. So, but it's almost, to your benefit to do that, to establish your business, if it's a little consultant business, whatever, make a few dollars and to get the tax break.
I mean, so that's subjective.
Wrong. Yeah, come on, Miss G. Come on, come with it. Come with it. Come on.
Because it's like I said, it's gray. So people think because they do it that means you can do it. And it's like, no, you just did it. Nobody told you could do it. So yes, you can have a business and write off your expenses under it, right? But as Stacy said, and you have mentioned like they make 10,000 and they spent 20. And so when I first started my business, I was upside down for a while. I was spending a lot of money and I wasn't making any. I was only able to justify that because I did have a job. So yes, it might have been I spent 30,000 and made 500, but it was a owner's investment into the business. But generally, no, you can't just have a business where in the IRS they have rules. It has to be a legitimate business. Like, so they think if they feel like you're not an active member in the business, if they feel like you're not operating it as a business, if they feel like it's a hobby, all of those things then discontinue the business. And so yes, it's helpful if you started a business and you're really making money and you have real expenses that you're writing off, right? But that's really you. And then again, that's like, it has to be subjective because if you have a W-2 and 1099, which is what your business income is coming, you may still owe because your day job, you're still making too much. And when you add this income now from the business, it's still pushing you over the tax bracket because the expenses from your business can't eat up all of that income. And so to me, it's not worth starting a business if you're not going to really run the business for the tax benefit, because you'll find that the tax benefit isn't as great as you think it is. So, and I'll use myself as an example. Before I went full time in my business, I owed every year, and not a little bit, like quite a lot, like 5 figures at one point in my first year, because being so busy, forgot to do my own tax plan and then got to the end and said, oh, I didn't think this out very well. I didn't adjust my withholdings at work. I wasn't getting income taken out of my money for the business. So now I'm at the end of the year with all this money and nothing to write it off against. And for real, or in my best creative thing that I can imagine. And so no, I'm not a fan of having a business just for the tax break. But if you have a business, they're better. And it could be, like I said, it's situational. So for me now in my business, it's better, but I also tax plan. I take every year at the end of the year if I owe, and I say to myself, how do I get close to zero? But that may also be, again, parting with some of the money, like putting some of the money in tax vehicles or putting some of it here, not taking all of it, reinvesting in the business. So I don't get to keep the money, but I don't have to give it to the IRS either. And that's fine by me, but no, so I don't want to say that, and people are like, oh, I'm gonna go get an LLC tomorrow, and I'm gonna write off my.
Like some folks get their real estate license, and that help. I heard that that's helpful.
No. Okay, so Regina just told you that I had I do a lot.
Well, come on now, so tell us.
So I was a real estate agent. And the reason why I got my real estate license and I was a loan originator as well is because of clients coming to my accounting office saying that they bought this big house, right? And they spent $20,000, $30,000, $40,000 to purchase this house, and their real estate agent or the loan originator told them that they can write it all off. And that's a lie. So they come to you with the HUD one and say, I spent all this money on this house. Why can't I write off all this stuff? And I'm saying no. And I'm like an advocate of helping. My thing is, I'm not going to steer you down the wrong path. I want you to be on the right path. So my thing was, Stacey, what can you do? You can be a real estate agent. And I became a real estate agent and I loved it. But being a real estate agent, an effective real estate agent requires a lot of work, right? A lot of work. And what happens is that you have to go out every day. You have to spend time looking for houses. Well, now in COVID, it's a little bit different because you're not driving people around, but it's expensive. There's fees. Now, and it's funny because it was around this time of the year or this time that I became an agent, and business was flowing. Then it stopped because that was that bubble busted. And that's when everybody was doing interest only, when I was telling people don't do interest only, and didn't realize that in 7 years after you done ran up your credit that you can't afford to, get another loan to refinance that balloon that you just, that balloon loan that you just did. And now nobody has a house, and that, it was a mess, but it was expensive. It was very expensive as an agent for me because I was spending a whole lot of money on gas, a lot of time from home. It was a whole lot. Now, some people love that. But if you're saying I think that you should pick something that you love, that you enjoy.
Well, I'm not saying for me. I'm just saying.
But I'm just saying people do it. And that's what I'm saying. People are doing it because they see the potential of how many people right now can buy a home. But in the next couple of years, when it's a seller's market, a buyer's market, then what happens?
Right.
You know what I'm saying? It changes, and then you're sitting there wanting, now you don't have any clients and you have to pay all these dues.
Yeah.
And the dues don't stop.
Yeah.
Dues don't stop, and they're not cheap.
Yeah.
And then
I'm a real estate agent too, Stacey, and I love real estate. And same thing. I tell people all the time, first of all, it's not a part-time job by any means. It's a full-time job. So don't think that this is a part-time job, no matter if you have another job or not. It is just an additional full-time job. And on top of that, like you said, it's super expensive. I don't think people understand all the fees. My husband, after a while, when I wasn't selling anything, because I could not keep up with the full-time job that I had and this job the way that I wanted to do it. And, like you, I was a caring agent. So I wanted to make sure that, I spent so much time with people and try to really explain things. And same thing, I had to give it up because it was super expensive, and he called it a very expensive hobby. It's a very expensive hobby.
And very expensive.
Very expensive. So I agree with you that, real estate, you really have to, I was passionate about it and loved it, but you really have to understand the cost benefit of being a real estate agent if that's the path you're going down. But I did have another question for you and Ms. G. I have heard people saying that who have other businesses, legitimate businesses, and that they've added their children as employees to help with the taxes or something. I don't really understand how that works. I don't have children, but I just thought that was interesting that they were saying that they've made their children employees of their business. Would that
Or to get the PPP loan, adding children as employees.
Okay, now see, that's illegal, that part.
I know it is. I'm not being illegal. I'm just saying that I've heard people say it.
If they can't really,
they said, or even to get the EIDL loan, they said they have 5 employees. I was like, you got 5
now,
employees?
if your kid is really,
I wasn't talking about PPE. I was just talking about in general that outside of PPE, they had a business and they had their children on the payroll.
I've heard people say that.
But I didn't know how that worked or if that was beneficial or not. It was just
it's not illegal. They have child labor laws, and if it falls, but again, it's all, and when I say the gray, it's always like, if your kid is really an employee of the business. So, they really, if your kid is like, let's say your assistant, or they answer the emails and they really do work. People use it because you don't have to pay taxes. So let's say you pay your kid, I think this year is $12,550, that you don't have to file an income return if you make under that. And so you can shift the income out of your gross income to the kid. quote unquote tax-free because now that kid doesn't have to pay taxes on that if it's under the limit.
Mhm.
And so now that's 12,000 less in your income that you're taxed on, that you shifted, like there is an income shifting strategy. And that's the rule. What I will say though, is that the kid has to be an employee. So I know a lot of people personally who use something like that. The kid doesn't work. It's more so you're trying to shift the income around and you don't have nothing to do with the income. I know people who also pay people who don't work for them. So they may pay, let's say I call you and I'm like, Stacy, I got all this money I made and I need something to do with it. I'm gonna say I paid you to work for me as a contractor on a 1099 this year. And I may say, she might say, well, if I make 29,000, I get the highest amount of money on my earned income for my kids. And so I say, okay, I'm gonna pay you 29,000 and you file taxes on that 29, you get your earned income. That's 29,000 less now that I have to report. And I'm gonna write off the rest of that as contractor. So people do find income shifting, and I don't want to call it illegal because the president did it. So I feel like when it's people, it's not as frowned upon, but it is not correct. No. I mean,
He's an exception to the rule, and you know that us cannot, they will not allow that.
They will not allow us, but lots of people do find, I'm gonna say Aunt Jeanette, as they were saying, people do find ways, and that's why some people open businesses. They get these tax strategies and they say, all right, I'm gonna make this work for me. It is not correct, but yes, if your child does work for your business, it's allowed as long as it's within the child labor laws and they're at, you're in the age bracket, not your 2-month-old or your 5-year-old, but if your 15-year-old after work works for you maybe 2 hours a day and you pay them and you can show that they're working and you're paying them, then they do allow for you to pay your child.
Okay.
What about your children that work other places? Do you have to file their income on your taxes? If you're saying under 12,500, I don't have to file their income on my taxes.
No, so I'm saying under 12,550 this year is the amount that you don't have to. So if you only made $10,000 this year, you technically don't have to file a return with the IRS.
Oh,
and
okay.
There wouldn't be any penalties and stuff like that.
And so if my daughter is working somewhere, I don't have to add her income into my tax, right? I don't have to do.
Well,
anything
would
with
she
it.
file her
Let
own
me
taxes? Wouldn't she?
So
file
let me
her
ask
own?
the question further is if your child is working or works part-time and has a certain income,
They
then
would
do you
file their own.
add them on, not their income to the taxes, but do you not add them to your taxes?
So
Or
That's a
add
good
them
question.
with
on,
that,
or
it can depend on their age. And so if it's, your 16-year-old is out there making money, but they're in your household, then you will file the tax return. They will file a tax return. They will file a dependent of another. You will file them on a tax return so that you would get that tax bracket. You get that tax write-off.
Okay, got you.
More than likely, they won't owe any taxes. So basically, unless they have more than
Well, this
more
year,
than that.
this year they may, well, 2020, I mean, they may have, because I know I've heard that a lot of high schoolers, since they were in virtual learning, worked full shifts at like Amazon, and so they may actually have
They may.
full
So
salary. How does that work?
would it still, I mean, if they're still a student, then you have the right to still claim them on your tax return.
Gotcha.
So
Okay.
then they still will have to file their tax return regardless, but they may end up owing because they file independent of another dependent of another. But they need to. But usually it's more beneficial for you to claim the child than the child to claim themselves. But what has happened with this PPP, with this stimulus money, everybody wanted their child to claim themselves, which is kind of crazy, but okay.
Wow.
Right.
Everybody wants that extra. Everybody wanted to get the extra money, but it doesn't. Honestly, I don't think that it makes sense, but.
Right.
Oh man.
Because they would only, that doesn't make too much
No,
sense.
seriously, I've had up to this point, I've I've had people all week long asking why, why did my child get the stimulus money, or how could they get the stimulus? Why did I claim them? Then when you owe, then because you didn't claim that child, how does that work? How does that work now?
Right. It doesn't outweigh, but it's the cash.
It sounds good,
Right. And
right?
if you're like me in 2020 and you had a baby, they will pay you though for the additional child that you had. So I'm excited to file my taxes this year for my for my extra, because the first thing I said was, how are they gonna know I have another baby? They're only gonna give me a stimulus for one child. There's two of them here now. And so if you did have a baby in 2020, they'll give you the money for the child, for the new baby that you had, the child payment that you missed. So.
Wow.
So if you didn't receive your stimulus at all, you can claim that you can file your taxes and claim for your stimulus on your taxes, right?
Right. But see, so, and people's money haven't come through yet. It really was an advance on the credit, and it was a refundable credit. So it's possible that when you claim it on your taxes, you won't get the full $1,200 if you owe. Like if you were it's gonna net against it. And so it's possible that you won't get the full $1,200 now, because really what they did was gave people in advance, and then on your taxes they're gonna ask, did you get your first stimulus and your second stimulus? And you'll say either yes or no, and then now it's a credit. Like, so it'll reduce your tax bill dollar for dollar. So if you get a refund, then you get the whole credit. But if you were to owe, it's gonna take what you owe first and then give you whatever's additional that's left.
So let me ask about the unemployment, because if you filed for unemployment and you had them take taxes out, right? Because I know that a lot of people didn't, but if you decided to go ahead and let them take taxes out, was that the right thing to do? Or I mean, not right or wrong. It's a matter of whether you wanted the extra money or whether you want, I guess, maybe pay it back, right?
I mean, and you may not owe. So like I said, that's situational, because the unemployment, depending on, how many kids you have, whatever credits you get, but if you made other money, how much they withheld from that job and those taxes. So some people didn't have money taken out and won't owe because they get enough credits to offset it. And some people may owe. It really is, it's going to be situational. So the better thing to me was to have it taken out if you didn't know anything about, to just let them take it out. And if you're supposed to get money back, you'll get it at the end of the year. And do it that way. I paid quarterly taxes myself, so I didn't withhold the money because I added it in my income, like I accounted for it and then paid it over the quarter. And Stacey, I don't know if you've seen different, but I would think that's situational, depending on what other.
Yeah, it is. It's situational because, like I said, everybody's tax situation is totally different. So there's some people who didn't work at all and received unemployment and don't have to pay any taxes. But then there's some people who worked and then had unemployment. So now that's two incomes adding together. So then, yes, it was beneficial. I told anybody who was receiving the unemployment to take the taxes out. Definitely, absolutely should have.
Wow, this has been enlightening. We always have this enlightening conversation on the Good Girlfriends.
I do have one more question too, though.
All right, I have one.
So now, for recent college graduates that maybe didn't have a job, will they be entitled to the stimulus? Because it seemed there were folks that if you didn't file a tax, then you didn't get the stimulus, correct?
So it would have, right, if you didn't file a tax for 2019, right.
2018 and
19. So they wouldn't have gotten it. But if they're a college student, their parent is probably still claiming them because they're allowed to if they're a student. And so the parent should have gotten the dependent if they're still claiming, because it went by your tax return.
Yeah, but it was over 17. So if you're over 17.
Okay, you're right. So no.
All right, just checking.
We trying to get you something. We're gonna get you something.
I'm like, can I get a quarter, $1?
Oh, over 17. So my daughter turns 18 in September. So I have now, if there's any more stimulus money, No, I'm not gonna get any more for her.
Not if unless she's filing on her separate.
Yeah,
She's
you don't
not.
get it.
Oh,
for
and
her.
that's why
Yeah.
people that have children that's like 18 want their children to file separate so they can get their own stimulus money. But then they forfeit the benefit of having the child credit on their
Right.
taxes.
Correct.
That's
That's right.
crazy.
Yeah.
I have a question about tax preparers. So, I guess because, it's by state. So I just found out recently, I didn't realize this, but you can be I guess, licensed or qualified in multiple states to do taxes. Is that typical that people would be a state preparer or a multi-state preparer, or is it just run the gamut? And also, when you're looking, like, what is your opinion? I'm a believer. I have my own accountant, so I use someone personally. But what are your opinions about people using like H&R Block and that sort of?
Oh, I'm only to just because you said H&R Block. And it's a very personal opinion. I started doing taxes there. That may be why I can't stand them. To me, they just don't educate, and I think that's why I don't like them. And so they're not, to me, H&R Block. I was an accountant major, but not. I might have been all of 18, so I didn't know anything at the time. And I walked in, read a book, took the test, and they said, "Okay, well, you can prepare people taxes." And in my mind, there was no way I should have been touching anybody's anything and giving you advice on anything related to your tax situation. But they gave me a paper, they made me sound all official, I had cards and everything. And so to me, I'm just not a fan of it because what I do, what Stacy do, I study this all year long, so it's not just from January to April I decide to come tell people about their finances. We take classes, you have to take continuing education, like all these things for me to say to the IRS, like I'm capable and comparable, to another person out there to be able to prepare taxes and give advice. And so I'm not a fan of tax offices that pop up for 3 or 4 months with people that popped in and you give people taxes. Two, like I said in the beginning, taxes are personal. And so to me, to get the best results, you should work with someone long-term, because those are the people then that can help you on tax plan, and they help you on, your goals and where you're trying to get to. Like, they have an understanding of things you may miss because they have a personal relationship with you. And so they're better suited to kind of say like, hey, what about this? What about that? Or I know you discussed doing this, things like that. And so that's just my take on them. I think that even if you think it's a basic tax return, it doesn't hurt to speak to someone and just see like if you're missing anything. Maybe you don't need someone all year, but one person that you go to all the time to just say, hey, like, am I missing anything? Did anything happen? Did I not click the right box? Same with online software. It's intuitive, but it's not helpful. They want you to pay for audit defense. So in their mind, they don't care if you make a mistake because they want to upsell you on their audit defense, or they'll say something like, you can use the free version, but do you want to get the deluxe version to go through the maximum benefit finder? And it's like, well, what did you find me on the original return if you said it was free? Like, I thought you asked me all the questions. And so they're going to give it to you and just say it was there. The fact that you didn't click on, this, so you didn't know whether you should itemize a standard deduction, they're not going to help you there. So I always think it's worth the extra money to find somebody that you trust and that you can talk to just look over the return. Because again, even just listening to Stacy, it's some things that but she said some things is like, oh, that's right. So it's such a big, the IRS is so large and it's so many rules, regulations, things that change. To me, like somebody that read a book that they published 4 or 5 years ago before they updated it, I don't think they're sufficient enough to prepare taxes. And it's not anything against them. They do have some people at H&R Block that are good, been there 20 and 30 years. But to me, those people have started their own practice, because at that point, it's anybody good and reputable in taxes. To me, you don't see the need to be under the umbrella of another company when you can do it yourself. So
Yeah. That's great.
And just to touch on your state question, I don't know people that are most people I know that you can file in all 50 states. So, I can file in all 50 states. Like your license and your P10 is for. Now, whether they choose to or not, you may have some people that say like, I only file, but you're licensed to, because the federal code for everybody in the state taxes are pretty small in comparison to what the federal tax return is.
Oh, okay,
And
that's good to know. I didn't know that. I didn't know.
I was going to say just quickly that the state of Maryland requires that you have a license to, if you are charging people to do a tax return, then you have to have a tax license.
Good to know.
So because of so many people filing incorrect tax returns, it holds the tax preparer accountable.
That's good to know. And I will just go on record saying that we've talked about this on previous Facebook Lives, the value of having, like you said, Ms. G, the relationship with someone. It's not even just about preparing your taxes, but I love my accountant. I mean, I call her all through the year to talk through strategies, and the value of that is, well, I should say that's invaluable to me because so I agree with you about it's more than just having them prepare your taxes. I think it's the relationship and helping you meet whatever goals you're trying to meet that comes along with that relationship. So
I always say I can tell what kind of client I'm going to have by the first question. If it starts off with how much do you charge, usually never works out because it's always like they have, if they don't believe it for themselves, I'm like, I cost way less than an audit or miss money. And I'm like, I usually can pay for myself in just a review of like most people that has a medium tax return on something that they're missing. I'm like, look, there's my fee right there and something that you missed to do. So yeah. I agree with you. It's invaluable to me, but some people only see it as money. And like when it's just the dollar amount, like they don't find value in it. And sometimes that's okay. Like, but people that see the value in it, I think the price to pay someone is worth it.
But they end up paying them more anyway. Yeah. 9 times out of 10. I've seen their fees are really crazy.
And it's structured.
And yes.
And not upfront.
Those people come in October, learn something in 3 months, and then say that they can do your tax return. I don't know how they can do that. I've been doing taxes for almost over 30 years, and I'm still learning. Yeah. That's crazy.
Yeah. Well,
I'm gonna tell y'all something. I'm an accountant, but I hated taxes. That's not my field. I never would go in that field. It's too many rules, too many regulations. And for y'all ladies, I take my hat off to y'all because that is something. Like I could do my own. I could hold my own maybe, but don't ask me to do your taxes. I don't want to do them. I don't want to learn the laws. I don't want to learn the changes every year. That was like my worst class in college. I hated it.
Every year I'm quitting. Every year I do it. And this is my last year doing. And it's always the clients. I'm always like, I don't promote that I do it. I don't tell nobody I do it. I just want to do it for the clients that I have. But I agree. It's the learning. It's like I always meet somebody who's telling me something so wrong. And I'm just like, no, like, why would you do that? Like, forget it. I'm gonna just do taxes because y'all doing this all. But it's a commitment to say the least.
Yeah. Well, that is true. I mean, that's one of the reasons why I feel like I'm willing to pay the fee because trying to keep up with the laws every year, even if you're trying to do it yourself, it's just too much.
Yeah, it is.
Try to
way too much.
And honestly, you know what I want to say is tax planning is important. So right now, you should be planning now for next year, in a sense. Because if you wait till the end of December to start planning for something that has already happened, that's wrong. So start now. So when you're doing your taxes, sit down with your tax preparer and ask them, that they have that knowledge to say, hey, what can I do differently next year? Or what should I start doing? What is it that it looks like, or what is going to look like for me next year? I want to buy a house. I want to do this. I want to do that. All of these things, you should be putting this out in the atmosphere now and not wait till the last minute and then think that miracles is going to come down out of the sky. So my thing is tax planning is very important so that you're planning now. That's why I say be prepared. My thing is even, like right now, should you be, check to see, are you taking out enough taxes right now? Because it's only February. So if you made a mistake, now you can correct it. You won't be waiting till June, July, and you already made 6 months of mistakes. You only made 2 months of mistakes now. Make that change now,
That's good.
Yeah,
So,
I agree.
And I have to say that I appreciate you saying that, Stacy, because I never considered, like, you look at taxes, like you pay your taxes every year, you go to your accountant, and love my accountant, and I'm glad I've been going to him for years, because if I have to cuss him out, I do that too, and then we move past that and we get to the business. But I never considered or never thought of it as tax planning, right? That is very important. I just, this is the first time I have to say that I'm hearing the term tax planning, right? Even for someone who doesn't have a business or whatever, like you said, I'm at picking your brain, both of you, to find out how I can, get a return or just not owe. And that's still part of tax planning. So I appreciate you saying that.
Yeah.
Yeah.
Because
Well,
your tax return tells a story,
Right.
It does
So
tell the
you
story.
may what you did last year may not be what you did this year.
Right. Right.
Last year, a lot of people start doing, dabbling into stocks and bonds and,
Cryptocurrency and things like that.
exactly. So how is that going to affect you in 2021? I see people asking so many questions about short-term and long-term, and do I have to pay taxes, and how do I pay taxes? What is the capital gain? What is all this stuff? And all of that, you need to know about that and how it's going to affect you now, so that you're preparing for it when at the end of the year. So it is so important. I want to buy a house. The IRS don't play those games about buying a house anymore. They make you sign a waiver and you have to give them your tax return. So because people used to lie about how much income they had, and when you're at the table and you thinking that you get ready to buy a house and it's pulled because they said that your tax return is, you have a debt or your income is too low or something like that. You don't want that to happen to you. So you want to plan in advance. So it's really important that you do that. And it doesn't take, honestly, it doesn't take long. And that helps. I'm trying to tell you, it will actually help you and make you feel better when you go with all your paperwork, and to your tax accountant or whoever it is that's doing your taxes. It makes you feel more comfortable that, okay, I got my stuff together. I'm confident that everything is good because we talked about this through this whole entire year. So I know how it's going to what the outcome is. But when you're going in blindly, you definitely don't know how it's going to look. And then you're really uptight and, but the thing about it is, that's why we're here. We're here to assist you, to help you. But that's the services that you're actually paying for, to
Not
make
putting
you
the numbers in the return.
Right.
Yeah. Anybody can, put numbers in, like you said, TurboTax. I've seen so many people do TurboTax, and I don't want to just, let me say, I'm not going to call the names. I'm just going to say any tax program, it'll ask you a question, and if you don't know the answer, you're going to push the wrong button, and it's going to give you the wrong answer, right? So why would you put yourself through that just because you want a big refund when you would end up paying it back?
With penalties and interest.
With penalties, with penalties and interest, and then you crying. So we don't want that. And it does. And I get, like I said, at the end of the day, everybody wants a refund. Nobody wants to pay taxes. Some people say, let's, I want to break even. So how do you do that? That's why you have that person you need to go to. So how do I break even? And, or what is it that I can do? If I buy a house, is that going to help me? Is it, because those things used to matter, right? It used to matter if you bought a house. Now it really may not matter anymore if you buy a house. So.
And it's important to be truthful with your tax preparer. Is that correct, ladies?
Some of my clients are too truthful. I don't want them to tell me. No, don't say
Yeah,
that.
We're not lawyers. We can't. If you tell us, we have to tell.
Yes, but.
Well, you started this conversation off with us, Stacy, by saying be prepared, and you ended it that way. So that is our final message around that. But at this point in our conversation, we like to highlight African-American female-owned businesses. So you ladies are our featured businesses for this evening. So you would love to tell us about how we can contact you, what services you offer, that would be great. We're going to share the information in the Facebook Live. And also, Ms. G, you're in New York. Stacy, where are you located?
I'm in Maryland, Baltimore.
All right. So yeah, so if you share that information with us, whichever of you would like to go first, that would be great.
Okay, I guess I'll go first. So the name of my company is called the Concierge Accounting Agency. We're a boutique accounting firm, and we were actually virtual prior to COVID, which worked. So I offer remote CFO services. So if you have a business and you need a CEO, CFO services, and you don't have one, or you don't have an in-house team, we set up systems. We take old systems and show you if you're doing it wrong, an audit function of your business to show you where you can have efficiencies in your processes. And if you don't have any processes, we go through your business and we establish them for you so that you can have monthly reporting. We do payroll and we do personal and business taxes. We're on Instagram. We have a website, and I don't know where you share it, but I'll share it with you, Jeanette, and then you can share it with them.
Okay, perfect.
And what was the name of it again? It was called the
Concierge Accounting Agency.
Okay, great. That's awesome. Stacy?
My turn. How about that? Okay, and again, my name is Stacy Johnson, and my business is S.A. Johnson Accounting and Tax Services, which I provide year-round accounting and tax services. I do business and individual tax returns and accounting for monthly, quarterly, annual. I've been in business for over 30 years, and I'm on Facebook as S.A. Johnson Accounting and Tax Services. And like I said, I'm here in Maryland.
Awesome. Okay, so you have a Facebook page, and it's S.A. Johnson Accounting and Taxes.
Accounting and Tax Services.
Accounting and Tax Services. Okay, gotcha. Awesome. This is exciting. You all made taxes sound very exciting.
The idea is not to be afraid, and I get a feeling when people, don't get upset, or, we're here to help, we want you to be comfortable. We want you to feel as though, I know it is really hard. Nobody wants the IRS to knock on their door. Who wants that? Who wants to see the letter? I don't want to see a letter, but we have to face it. But when we do face it, what is it that we're going to do when we facing it? Are we going to be facing it and be like, yeah, here I come, I'm ready for you? Or I'm like, oh my God. No, I want you to feel confident that whatever we're doing, whatever the services that we're providing for you, that it's going to work. And then we're here to, and if it don't, we here to, we got your back. We're telling you throughout the year. That's what I said, the tax planning. What is it that you need to do so that you don't, if they do come, because I'm not going to say they're not going to come because it's random. It's a random, it's the pick of the draw. Some people make it harder for themselves when they are red flags. But if it's not the red flag, they're coming, it's the pick of the draw. So if they do come, let's be prepared.
I would just say, I just encourage people to find someone to work with that they're comfortable with, that they trust, and build a relationship with them, because I, in the past, have had an accountant for a few years who, my husband and I kept saying we needed to find a new accountant, but we didn't. And we kept going to him. And finally, when we made the switch to someone who we are with now, who we're quite pleased with and been with for a while, we realized that our feelings were accurate, because when we went to our new accountant, she showed us all of the deductions that he had not taken, that he had told us that he was taking, and all the other things that he wasn't doing. So the gut feeling was right. So you really need to go with someone who you trust and get, really good advice, and just stick with them and build that relationship. That's what I encourage people to do.
It's like finding a therapist. You got to find one that's the right fit. They have to speak your language. And so some people like somebody that's more buttoned up, and I'm probably not for them. You know, some people like different things, but as long as the person knows what they're doing, we're all filling out the same form. And, you know, so whoever, but you have to be comfortable, because if you're not comfortable, you're going to leave out things. And then, you know, it's like, oh, well, I didn't tell you because I didn't want to, you know, like I said, I want you to tell me everything to a limit, you know, but somebody that you can be truthful, honest with, you know, because that is important.
Collaborate, like you said, someone who will collaborate with you. All those questions that you all mentioned today are things that I feel like your accountant should be asking you, prompting you for additional deductions that you may not have thought of or whatever. Those are the conversations I'm talking about. So I think that's great. This has been awesome, ladies.
It's been
Thank
awesome.
you. Thank you.
Thank you,
Thank
ladies.
So incredible. And everyone who's watching out there, please share this information with your family
Yes.
and friends. Please visit our YouTube channel. This is going to be up on the YouTube channel by tomorrow, but please go to our YouTube channel and subscribe and share this information out. We want people to be informed and understand what they have to look forward to this year with their taxes. So thank you, everyone. As we always say, we hope we have blessed someone out there tonight. We all know that we get blessed by this information, but we hope that we are blessing to someone. So any parting words, ladies? No? All right.
Next week.
Just thank you.
Thank you,
Thank
ladies.
you.
Thank you
Oh,
very
Miss
much.
Stacy, thank you, Miss G.
Thank
Thank
you for having me.
Thank you, ladies.
you so much. Have a good weekend, everyone.
As well.
All right.